So the debate is Bitcoin versus gold. I think that all gold holders and all Bitcoin holders agree on sound money principles, and the real debate is which is the best monetary system in order to pursue the ideals of sound money. Human civilization rises through channeling energy. If we want to better the human condition, we need to be able to capture, store, and channel that energy. Money is energy. Money is a store of value, and it's also a technology that allows us to trade that energy over time and space. So if we look at the history of money, we've gone from commodity money to coinage of those commodities, to notes represented by that money, to fiat currency, and now we have cryptography as a basis of money. And God coin is like perfect instant transactions, never losing any information. Well, the next best thing that we've invented as humans is Bitcoin. So Bitcoin's the most efficient monetary system we've yet to implement successfully. It's 21 quadrillion Satoshis, 350,000 transactions a day. It costs about 10 basis points of the monetary network to clear those transactions and to secure the network. And it stores the value and provides security to everybody on the network effectively for free after those transaction fees. Bitcoin's the most disruptive force in the century. In 12 years, it grew to $1 trillion in monetary value. That beats Google, Facebook, Amazon, Apple, and the like. That's the market sending us a message. It's the next chapter in the mobile wave. We digitized our photos, we digitized our videos. Now we're going to digitize our money, and our currency and assets are going to flow to billions of people. Money is collapsing. We've got a massive inflation problem. We're losing 1% of our value in currencies every single month. Humanity without an effective, strong money is like a type 1 diabetic without insulin. You can't store energy, you can't create fat, you're going to starve to death. Gold's not a solution. It's not practical to distribute gold in small quantities to 5 billion people. Bitcoin is a solution. It is spreading at more than 200% a year. We're adding 3 million users a week. It's accelerating. If I wanted to give knowledge, music, and money to the world, in the 19th century, you did it with books, pianos, and gold. They're now antiques for the elite. In the 21st century, you're going to use the internet platform and Bitcoin, and you're going to provide iBooks and Google and YouTube. You're going to provide Apple Music and Amazon Music and Spotify to everybody, and you're going to provide Bitcoin as an asset for everybody. Gold used to be the best solution. It isn't anymore. The time has come to pass the torch from gold to Bitcoin. Bitcoin's humanity's first effective engineered monetary system. It's as profound as our rail networks, our road networks, our electrical networks, our telephone networks, and the internet. Bitcoin can and will deliver the virtues of strong money the gold idealists have long hoped for. You can't build a computer without silicon. You can't build a skyscraper without steel. You're not going to survive if you don't pick the right element. Crypto is the steel of the 21st century financial economy. An engineer would say you have to choose wisely. There's a right answer, there's a wrong answer. So gold is element 79. It's an ideal ornamental metal. It's indestructible, malleable, it's attractive. We love these things. It makes great jewelry, it makes a great ornament. It's just not a perfect monetary asset because you can inflate gold, you can confiscate gold. It's immobile, it's not easily divisible, and you can counterfeit it. There's no trusted protocol to guarantee the integrity or the synchronicity between paper gold and actual gold. Bitcoin is not just an asset, it's a network and it's a protocol. People would say it's the world's first global self-settled real-time clearing bearer instrument. It is all those things you mentioned. It's decentralized, permissionless, global, immutable, scarce, auditable, instantly transferable, not seizable, highly divisible, mostly everything that gold can't do. The asset itself, secure, easily divisible, is deflationary. People might lose some Bitcoin. They're never going to add more than 21 million. You can transfer it around the planet. It's transparent to everybody running a node. You can authenticate it instantly from a $100 smartphone. That's makes it the perfected monetary asset of the human race. We've never actually had an asset that clean. It's synthetic gold without the defects of monetary gold. Now the network itself, it's global, it's open. Anybody can run a security node or a validating node on the network. The protocol is the third element of the asset, which makes Bitcoin superior. And what's special about that is it's a protocol for synchronizing financial applications with integrity to the underlying Bitcoin asset. Bitcoin applications, Bitcoin is harder, it's smarter, it's faster, and it's stronger than the gold that came before it. Harder meaning gold has a half-life of 30 years. You make 2% more every year. Bitcoin has a half-life of forever. It's effectively immortal and it's organically evolving. It's only going to be better in 100 years than it is now. It's smarter because the applications running on Bitcoin are driven by modern software and modern CPUs and modern servers. They keep getting smarter and faster with Moore's law. You can make 100 million calculations a second around the world across hundreds of thousands of different servers on Bitcoin applications. You can't do that with gold. It's faster. You can do billions of transactions at the speed of light on these applications. You can run them 24/7, 365. It's stronger. You can channel high frequency energy I could flash 10,000 loans for 3 days each across 100 jurisdictions between 10,000 different companies and fetch them back with laser-like precision. So in short, Bitcoin, it's more than just a monetary network. It's a trust network allowing millions of applications to serve billions of people. And it's going to accelerate global commerce in the 21st century. And it's critical for allowing for safe and efficient operations in cyberspace. That's why the asset is superior to gold. Central banks don't own any Bitcoin. As soon as one country starts to buy Bitcoin for their central bank, the price is going to rip. US dollar is going to be the big winner from the spread of Bitcoin. 5 billion people are going to have a mobile wallet on their phone. They're going to have a currency layer running on Lightning rails or running on a compliant payment rail. Will have the US dollar, might have the euro. The big losers are going to be the bottom 50 countries. They're going to lose their currency privileges. All the collapsing economies in Africa, South America, and Asia, they won't keep their currencies. People will switch over to the dollar. Bitcoin is critical to US technology supremacy and the US dollar supremacy, and one day 5 billion people will use the US dollar as a currency. I don't think the government's going to fight it. I think the government's going to embrace it. And will the government stand by and let Bitcoin grab gold's capital share and part of the bond market? Well, they allowed the growth of the Vanguard 500 and the S&P 500 and ETFs and bond mutual funds and gold ETFs. I think that as long as the assets sit in regulated banks and custodians, they won't have a problem with insurance companies and investors investing in Bitcoin rather than an S&P 500 index fund. Gold invites violence. Alexander, gallivanted around the world to seize gold. Livy tells the story of 1,000 Roman sieges in order to steal the gold. Caesar sacked Gaul to take their gold. Kublai Khan seized the gold. Pizarro seized gold from the Incas. Cortez seized gold from the Aztecs. Charles I seized the gold from all the British nobles. The Prussians seized gold from the French in 1871. In World War I, everybody seized the gold. Lenin seized gold from the church in 1922. Roosevelt seized everybody's gold in 1933. Stalin seized the gold of the Spaniards in 1936. Churchill took everybody's gold in 1940 at the onset of the war. At Bretton Woods, the United States seized the world's gold and then, took it hostage. And then Nixon killed all the hostages in 1971. It's regulated. You have to secure it with guns, people, steel, concrete, carbon. It doesn't scale. Gold's always getting seized. The problem is you can't secure gold. The cost to secure it goes up with the number of nodes or caches of gold, the value of the gold in the cache. If you want to stress test it, you ask yourself the question, when I give this thing to 5 billion people, how much is it going to cost me? Gold audit won't scale because the more nodes, the more transactions, the more value, the more cost, and the regulators get involved. It's very people intensive. It's infrequent, slow, it's unreliable. It's a risk factor. Gold security transport and audit are regulated by every nodal jurisdiction. They're corruptible, they're uncompetitive, they're antiquated, they're elitist, they're ineffective, and they're out of reach for 99.9% of the population. The gold applications, what we call paper gold, they don't have any technical protocol with integrity, so they're all corrupted by hypothecation, regulation, and inflation. Bitcoin security, transport, and audit are pretty effectively free. They're effective, they're unregulated, they're egalitarian. Everybody has the same rights. A person with $100 of Bitcoin has the same security as someone with $1 billion of Bitcoin. There's competition to continually improve the services. They're decentralized. The security nodes are decentralized. Gold's physicality and indestructible nature, they invite malefactors to kill you and take your property. Bitcoin safely stores your property in cyberspace where it can't be seized by force, and that encourages peaceful negotiations rather than coercion. %95 of the gold was confiscated in the last 100 years. So maybe theoretically the United States government might have got that gain, but everybody in Russia, China, every country in Europe, everybody in South America and Asia, they all lost their gold. So over a millennium, gold, 2,000 years ago, gold was like 80% of money. The monetary value of gold is maybe 5 trillion, half of the gold supply, and the total store of value in the economy is 250 trillion. So you divide 5 trillion and 250 trillion, and gold is 2% of all money. And I came to this with a completely objective clean slate. I said, I got to buy gold or I got to buy Bitcoin. But my conclusion was, if Bitcoin works, gold probably won't. And if gold works, Bitcoin won't. If you look forward, what you see is an extraordinary asset on an extraordinary network that solves the problem better than gold can solve the problem. That's why I think it's the right choice, and there's consequence to making the wrong one. I would say that there's conflict of interest between people that make their living in the gold mining business versus people that make their living or pin their hopes on gold holding. They're actually naturally enemies. Yeah, so my view here is Bitcoin's the ideal architecture to be a currency and gold isn't. And the history of commodities is as the price goes up, the demand decreases, the supply increases. Gold is a commodity. Bitcoin is a scarcity. As the price goes up, the supply is constant. Historically, all commodity businesses, they need a cartel to be stable. If you look at the dynamic model of Bitcoin, the demand goes up, the price goes up, mining stocks go up. Miners stop selling Bitcoin. Miners start buying Bitcoin with equity and debt, which keeps going up. Investors buy Bitcoin. Companies buy Bitcoin with equity and debt, like my company, which borrowed $1.7 billion at nearly zero interest to buy Bitcoin. Banks can't short the Bitcoin. Governments don't have the reserves to sell to short the Bitcoin. The government has less motive and less capability to manipulate the price down because they don't have it. They can't sell it short. The banks, the mutual funds, the insurance companies integrate and they market the Bitcoin. Big tech. What if miners stopped mining gold? And he knows the answer, which is if the miners stopped mining gold, gold would be a good investment. And every gold investor knows this. Bitcoin mining is a good use of energy. Gold mining is a destructive use of energy if you're a gold holder versus a Bitcoin holder. Yeah, I think when we look at the ownership structure, Bitcoin versus gold, what you have is a dichotomy. Gold owners tend to be a bit cynical, more conventional, less technical, more traditional. They rely upon metrics like CPI and conventional sovereign interest rates. They tend to be diversified. They're traders. Sometimes they're speculators. Bitcoin holders generally are maximalist and they're believers in the technology as a force of progress to elevate the entire civilization. And it's not a speculation, it's not a trade, they're not hedging. Gold miners are maximizing the gold supply to the detriment of everybody in the gold industry. On the other, so when you look at ownership structure, you have Bitcoin maximalists that view Bitcoin as money. They're optimistic, they're all in, they think the number's going up, they think freedom is going up, they believe in the Bitcoin standard, it's viral, they have laser eyes, it's technology, there's a master plan, make the world a better place through technology. They're more passionate than any of the gold bugs, any other investor group I've ever seen. Gold holders on the other side of the equation, they're a bit skeptical, they've been burned, they're a bit cynical, and even the advocates aren't really willing to commit more than 10% of their portfolio. And it leaves you with the last question, which is, if you're only going to invest 10% of your portfolio in gold, what are you going to invest the other 90% in? You know, people think Bitcoin's a speculation if they don't understand how the technology works. But once you understand a technology is superior, it's not a speculation. About the millions of people that are buying Bitcoin, I think it ignores the observation that everything else they could buy is riskier. And so if you dissuade them from buying Bitcoin, you're encouraging them to do something which is riskier. There's no zero, there's no simple answer here. It's a zero-sum game. You either buy the thing that's less risky or buy the thing that's more risky. They got to do something. I just think it will perform better than the alternatives based upon the laws of physics and the technology dynamics. And is Bitcoin a store of value? Well, I mean, it's people keep saying it isn't. It seems pretty obvious that something that keeps going up in price and up in value is a better store of value than something which is stably not going up. Yeah, I look at the market forces, and as I look forward, Bitcoin's creating global markets in energy, in money, and in finance that operate across all borders and jurisdictions 24/7, 365, and they're open to everyone to participate. And there are rules, but there are no rulers. Even though you might not be able to capture this 40% contango in Alabama as a hodler, you could just buy the Bitcoin and wait, and then hundreds of billions of dollars of capital will find an exchange run by an appropriate entrepreneur offering the right sort of derivatives in order to build out that yield curve and drive asset appreciation. That's a benefit to everybody on the network. The significance is any finance, insurance, or mutual fund company can 10x the value of their traditional offering by injecting Bitcoin into it. And then any big tech company can become a bank. Morgan Stanley, Goldman Sachs, JP Morgan, Citigroup, Fidelity, Facebook, Apple, Amazon, Google, Microsoft. These are major drivers. The gold industry continues to market the myth of gold as money while engaging in activities to elevate the US dollar as money. And manufacturing, marketing, and selling yellow metal is expensive. The next $1 trillion that's spent on gold mining is going to make gold less valuable. Whereas in the year 2035, 99% of the Bitcoin is done. Bitcoin mining is over. The miners are effectively going to be buying Bitcoin. The stock to flow goes to infinity. The stock to flow goes negative. And all of the money spent on Bitcoin mining is to secure the network, provide billions of people with a better store of value to improve energy efficiency, to make the world a cleaner, better, more efficient place. So the market force, I think, clearly favors Bitcoin. Gold investors share the same macroeconomic view as Bitcoin investors, but I think they tend to lack one key insight. Money is technology, and Bitcoin's superior monetary technology with powerful network effect. I've watched hundreds of interviews of gold advocates, and they almost never address the technology issue. I found a reference by Mike Maloney 10 years ago, but for the most part, they're not thinking about technology. Diversification makes no sense when there's a correct answer to an engineering problem. You would never diversify the metal in an aircraft wing, or the answer to a math problem, or the shape of a ship's hull, or the oxygen content in a scuba tank. When the cabin depressurizes, you don't place an oxygen mask on 10% of your family. Money is a winner-take-all competition. There is an answer. Choosing the wrong answer has dire consequences. If we contrast the Golden Knight with the Bitcoin Dragon, the Golden Knight's got a 30-year life. It's plodding, stupid, heavy, predictable, and stagnant. Up against the Bitcoin Dragon, the Dragon is immortal, teleporting, dematerializing, hyper-intelligent, rapidly evolving, moves at the speed of light. Which one of these two is going to win the fight? Gold bugs say put 10% into physical gold to protect against the bank crash. What about the other 90%? They're not really providing a solution. They're suggesting a hedge. Bitcoin is a solution. Mike Maloney, he says, quote, "The greatest wealth transfer in history is therefore the greatest opportunity in the history of mankind." Well, yeah, if you actually pick the winner in the wealth transfer. If you pick the loser, then you miss out. It would be a shame to actually know this is coming and then miss out. The gold standard fails because gold doesn't sufficiently empower people to control their own property. Gold coins were too inflexible in the 16th century. They don't represent a solution in the 21st century. In 1914, at the beginning of World War I, the gold standard was thrown overboard within 2 weekends. That's lips from Gold Wars. The Genoa Conference in 1922 and Bretton Woods in 1944 show the world will at best create a faux gold standard, then corrupt it. If we have gold standards, we are going to get scammed again. Bitcoin addresses this issue by shifting power into the hands of individuals via cryptography and implementing a decentralized security protocol via proof of work. And therefore, it's protecting money from taxation, inflation, and confiscation. Billions of individuals can take control of their money via mobile technology and trade with each other at the speed of light via currency of their choice. Bitcoin's a money virus. Nobody's ever defended anything successfully. There is only attack and attack and attack some more. That's patent. Gold is defense. Bitcoin is an offense. It's spreading at 200% a year. It's going to be to 250 million people by the end of this year. Next stop is 1 billion. Next stop is everybody. The network is worth 25 trillion a year to solve the strong money problem. The protocol Bitcoin's an economic imperative. It's a technical imperative. It's a moral imperative. Economically, there's $250 trillion of currency derivatives that are debasing at least 10% a year. That's a $25 trillion a year problem. Every investor needs to store a value to survive the currency flood. Technically, this is the greatest mobile application. This will be the greatest mobile application. Mobile wallets holding digital currency and digital assets. It's going to allow 5 billion people to trade with each other and protect their life force. Bitcoin is the protocol that synchronizes 100,000 financial applications in cyberspace. It'll be the kingmaker, and it's going to tip the balance of power in favor of whichever big tech company firm embraces it the most. It's a moral imperative. It's the best hope the human race has for life, liberty, and property for the 8 billion people struggling under the weight of excessive regulation, corrupt politicians, and collapsing currencies and dangerous physical environments. It is an instrument of economic empowerment and can be delivered to everybody. So, if you believe in sound money, life, liberty, property, and the pursuit of happiness, it's time to abandon gold and move on to Bitcoin. This century, we've digitally transformed messages, books, photos, videos, meetings, newspapers, payments, and relationships. Now it's time to transform money. Bitcoin is hope for a better world.